Hey everyone, welcome in to another daily editorial here on the KE Report. In this daily editorial, going to be again discussing gold's continued move higher, now touching 2,200 on the futures. We'll talk a little bit about the gold stocks and also talk about the equity markets that continue to perform pretty well in a wide range of sectors. I'm chatting with Joel Elconin, co-host of the Benzinga Pre-Market Prep Show, also editor of the Pre-Market Prep website. Joel, as I said, let's start off with gold. Look, you've been on record. We've talked a number of times about how gold pump fakes so many investors, threatening to break out and immediately reversing. We're now on, I think, day 8 of an upward move where gold started to break out tail end of last week and has finally carried through the rest of this week and is now just touching that 2,200 level. Joel, what's your take on this gold move and how much higher could it go here?
Boy, oh boy. Thanks. Good afternoon. Thanks for having me today. Well, I don't want to poo poo the move or anything, but I look at the rolling front month futures contract, right? Because that takes into account interest rates, time value of money, and everything. So, according to my monthly rolling futures front month contract, the all-time high would be 22.8830. So if you're looking for another target, I know with the spot and everything, you have a different scenario. But just like what everything else is tied to, it's all about interest rates, and I think that the tone that you got from Pump and Powell was, a little bit of a leaning towards lowering rates, and that's what the gold market wants to hear. And finally playing a little catch up with Bitcoin here. But that's what I'm attributed to. It's a big move. I know I always say, "Oh, I'm going to sell it when it gets up here," but I guess I'm getting too old to sell things, so I'll just stick. I've had this lot since COVID, and I just stick with it. I also have the some miners that are not quite reacting as well to the move.
Let's talk about the miners then, because on that gold front, look, it's been a strong move, and the majors have actually moved a fair bit. But again, they were moving in such an opposite direction. Gold was consolidating around all time highs. The stocks kept melting down. But now, at least the big guys started to move on some higher volume. Do you think that there is a catch up trade opportunity here?
Actually, on our show, we talked about this a little bit earlier in the week, whether or not there was a catch up trade. And you always know, you can end up with mustard on your face when you're waiting for the catch up trade. But it did start to work out. What we During our discussion, we attributed the lack of participation by the miners by once again the boogeyman in the room, interest rates, right? A lot of these companies, in order to produce, need financing, and right now financing is not cheap. So that's a little bit of a hindrance. Now you have caught a move in the GDX, and a move is a move. So you just trail your stop up if you have specific targets. You just got to be patient, and you got to wait for them. Really not seeing much on the charts. In fact, you haven't even exceeded your high for the year yet in the GDX. The high for the year comes in at 31.24. So that would be my next target on the upside. Now, what you got to be a little bit worried about is if this move doesn't hold in gold, are they just going to whoop it up and take it right back down? But that would be my next target for the GDX. For the junior miners, GDXJ, same thing. Let's make a new high for the year. And that would be 38.23. If you want to go a little bit more granular and see what the closing high for the year is, you could do that as well. In fact, I have my charts up here if you guys are interested in the closing high for the year. The GDXJ, that would be at 36.36. You're right there right now. And let's look at the GDX for a little different perspective. The closing high for the year, ooh, that's way up there. Now, that was made on the first day of the year at 30.56. So there you go. You got some room on the upside here for these miners.
Yeah, so that's the thing, right? Because the stocks were trending down so much and trended down for most of this year already, there is some work to do on the upside, but some people are viewing that as a potential catch up trade. Joe, I do want to ask you too. We heard news about Stan Druckenmiller coming out and starting to buy some of the gold miners. I think it was a few weeks ago. I know that got some attention in the precious metals community, but do you take note when we do hear of big money managers entering or adding to sectors that are beat up like this gold stocks were?
I mean, I will take note. I would just say, well, you know about 13Fs filings, right? In the United States, they're if you have a over a, I believe it's over a 10% stake, you have to disclose your positions, and Stanley's done okay, over the years, but I take more note of Warren Buffett. Maybe Warren is in a spot that really no one else is. So I will take note, but it will not be a catalyst for an investment decision for me.
Okay, so again, kind of watching GDX, GDXJ to see if they can just reach those highs just for this year and see how much higher they can go. A lot of resistance levels for them to take out and for us to watch. Let's also talk about Bitcoin since you brought it up. Bitcoin has continued to run. Now, what are some of the drivers behind this Bitcoin run in your eyes?
Story, story, and more story. Wow, that blasted to 71K today. That must have been on the jobs number. I mean, you got your hodlers. You have a halving coming up. You have their perception of the any weakness that you get in the U.S. banking system kind of gives credence to the Bitcoin move. So that also people look at that as moving opposite of interest rates here. So what I will say for you hodlers, I mean, this has had a move and it ain't backing off. I did see a spike high today up to 71,055. But we'll see. I mean, it's been up here. So can't really poo poo the move yet here in Bitcoin.
What about the moves in the U.S. equity markets? We have the S&P at about 5150. It's continued to move higher. The Nasdaq is over 16,000. The Dow is close to 39,000. It continues to be a strong market that is also widening out that we have heard. And that widening out is happening as money just continues to come into the broad averages. So, how do you view the overall strength and sustainability of the run in the markets?
Well, as we speak, I mean, I don't want to poo-poo the market here, but we have had a significant reversal in today's price action. The S&P index hitting 5193. We're a cool 40 handles off that. That's a pretty significant intraday decline. We haven't taken out the pre-market low. So historically speaking, and I think we've mentioned this several times on the show, the propensity of the index to hit an all-time high or an all-time closing high on the Friday. Well, today's a Friday, and you did hit that all-time high. To me, the all-time closing high looks in jeopardy now. If you look at the data that you got today, yes, there was a bigger expected increase in the jobs, but unemployment rate ticked up a little bit. They chose to buy it off that initially. I think you're having a little bit of buyer's remorse after the tremendous week. So I am looking at the very short term. I'm not, headed for the hills or anything, but I am noting a reversal in the S&P 500 index futures today. To me, that emphasizes the importance of that close from yesterday, which was a murky close, the way they jacked things around after the Broadcom and Marvell numbers. But once again, I focus on closing prices and that all-time closing high in the S&P, 5161.75. That's gaining significance the farther we move away from it in today's session. Also, talking about the broadening, we talked forever about the IWM and its ability to break through that 50% level. It did. It's holding nicely once again. The mantra of lower interest rates is helping the stock out. And, but once again, is it these catch-up trades? They're good. They work until they don't.
Yeah, well, it's actually been quite interesting to see the moves in expectations of a rate cut now after that jobs number being about 80% for June. Let's talk about that jobs data though, because headline number was more than expected, 75,000 more than expected. Prior 2 months were revised down by 167,000. I think one of the more important things that stood out to me is that the unemployment rate did rise 2/10 to 3.9%, which is the highest in over 2 years, January 2022. Is this a weakening in the job market that the Fed has been looking for?
You can't have your cake and eat it too, Corey. Right? You can't have, the unemployment rate, going up, and well, that means lower interest rates are coming. Well, how much are lower interest rates always factored into the market? Conventional investing wisdom told you not to fight the Fed in last year. Well, that was a good investment strategy until October, right? But as it turned out, for the last couple months of the year, it did pay to fight the Fed. So I just don't know how many times I can reiterate this. Stability in the interest rate markets is more important. If your investment thesis is that you're going to get 3, 4, 5, 6 rate cuts, then that means you have a slowing economy, and that means you're going to have lower earnings. So, right now, yeah, you're seeing a little bit of weakness in the job growth. What you got to focus on, there's two other things that you got to focus on next week, right? You got to focus on the inflation data. You get a whiff of higher inflation, then those chances of rate cuts are going to be reduced. And also, over the years, we've talked about the quadruple witch expiration, which often marks important turning points in the market. You had the rollover on the contracts on Wednesday, and you had some herky jerky price action on Wednesday and Thursday. Starting Monday, you'll be trading the September contract with the fireworks on Friday that quad witch expiration next Friday, which is always an important event.
So, Joel, any other sectors that you're noting here outside of the small caps that we have continued to touch on that are showing strength or are telling a bigger picture of this market?
Well, I mean, the XBI. I mean, come on. I mean, that's had a decent move. That's playing a little bit of a catch up trade. I just don't like the consolidation that it's having. It's really just all about the chips and the dip. I mean, that's all the. It's this market is so predicated on this AI trade and AI things related. I really the strength you're seeing in the financials. Financials is not a huge part of the market, but they've been showing some strength. So Bank of America, I think, hit a 52-week high. No, not quite a 52-week high. Yeah, it did. It was higher than it was in February. My good old JP Morgan is chugging along. That's double. Ooh, that looks like a double top today. Energy is perking up a little bit. Really hasn't been following oil as closely, but as you pointed out to me, the XLE is looking pretty healthy. But no, I mean, it's like you got to go where the money is. That money's been in the AI trade, and SMCI coming off a little bit today, Nvidia coming off a little bit today. Those are your leaders, and the other ones, yeah, you can try and pick up the scraps, but with the stocks that have fallen, you always run into overhead supply. The other interesting thing, don't look now, but the home builders, old time highs here. If you're a momentum trader, breaking out on the monthly, do what you want with it. But some strength in the home builders. Once again, that's predicated on the fact of perhaps lower interest rates coming later in the year, which I just don't think is the greatest investment thesis.
So, Joel, it seems like if so much is being driven by the potential of lower rates and we could very well be higher for longer, this almost seems like too much of a Goldilocks scenario where we have multiple sectors pushing to or close to all time highs. We also have gold moving higher, the US dollar's corrected, that's given a boost to everything. Are we in kind of this Goldilocks phase where people should be right to be a little bit concerned about just how strong everything is?
Yes, Yes.
Have we seen
Yeah.
this in the past?
Yeah, this is like yeah, no, this is blown by everything that I've seen in the past. The moves in Nvidia, the moves in SMCI, the move in some of these AI stocks. It's just unbelievable. And once again, and I hope it's something that I've been on for years with you. There's one thing I like to preach is that where are you at in your investing cycle? Where are you at in your are you 80 years old? Are you 70 years old? Are you 60 years old? Where are you at? What are your long term goals? Are you younger? Are you having a kid going to college? I mean, there's a lot of other things that you have to look at. I mean, frankly, I'm older. I'm underinvested. I bought into the mantra of that, rates, got caught in the Fed pivot. But you know what? I'm getting paid. I'm getting paid 5.5%. I'm getting paid 6%. I'm getting paid while inflation comes down. So you just have to look at now a young buck like adding to your position in life recently. Yeah, I mean, you just got to buy the dip and hope for the best. But yeah, lofty levels up here if you want your list, specific things to look at. I mean, can't go through every stock in the world here, but check out your all-time high. But more importantly, check out your all-time closing high. Look for some institution accumulation or distribution. See what the big boys are doing. Right now, the big boys have been buying. You've now backed significantly off the high. So let's see. Let's see what the market brings. Can't call the end of a bull market because that's a very hard thing to do. But the weakness I'm seeing in the market today gives me a look for a little bit of caution.
Okay, very interesting. We'll see where these markets close, and I think even more importantly, see how they open and trade early on next week. It is just interesting to see. Again, rate cuts very much more back on the table. Powell did stoke that fire a little bit, but boy, oh boy, it's pushing a lot of sectors higher, continuously higher too. So it's been pretty good for investors as long as you are invested. Joel, as always, thank you for your time. You can check out Joel's commentary at his pre-market prep website, which I will link to below. Have a great weekend, Joel.